afternoon. Today is Monday, April the 24th. The time right now is 7 minutes past noon. Let's do a bit of a recap on what the market did last Friday. Basically, on Wall Street, it was all quiet on the Western front. We do not have a new high for the Dow Jones itself. The Dow Jones high was actually traded 2 Fridays ago at 34,082.4, as you can see in this chart here. So it does look like the market is consolidating, and we are in the midst of an earnings season. We are not done with the earnings season. We still have 2 more weeks to go, or maybe 3 weeks to go before we end the first quarter earning reports. And the market seems to be suggesting that the market may actually be drifting lower. But remember, at the end of this week, we are looking at the end of the calendar month. So anytime the market ends in the calendar month, for a new month, the sentiment may shift to a different gear. So my take is that comes May, the market is vulnerable to the sell side, meaning to say that if the market does not take off from here, then there is the possibility market may come under selling pressure. In the meantime, nearby support for the Dow Jones is somewhere around 33,275. And if you are those people who are still very keen to buy, maybe look for an area around this level at 33,275 to see if you can buy some more of the index. But in my opinion, the upside potential is not fantastic. In fact, I have a target at 34,406, and I think the possibility of market taking out the 34,712 is not very, very high. I'm basically quite bearish on the equity markets in the States. So this is basically my opinion. Now, in the S&P 500, we have a slightly different take. The market actually registered a high last Tuesday at 4,169.5, and since then, the market too has gone into a bit of a consolidation. So in the meantime, the market has gone into this bracket of prices, which I think is going to be vulnerable to the sell side, and as we can see so far, it is the case. This bracket of prices 4,140 to 4,195, and the price traded so far last week was 4,169.5. So we can see prices, if they continue to drift, the nearby support is probably around 4,069 or 70 levels. So not much of a downside, but also not much of an upside. We will have to see how market reacts this coming week. There is no major economic release until Wednesday, so the market is going to be very, very quiet going forward. Okay, over in the NASDAQ itself, we can see on Tuesday, while the S&P 500 managed to register a new high for the last 2 months, the NASDAQ did not quite make it. The high traded this round was on April the 4th, 2 weeks ago, at 13,204.08. So last Tuesday we have a rally attempt but failed at 13,196.18, so did not quite break the 2 weeks high. So the market now is drifting, but you can see that in the near term there is some kind of support at about 12,860 levels. You can see, but market basically has been holding up very, very well around this level. So if this is the case, that we cannot rule out the possibility of another rally attempt in the NASDAQ. But if the market do come back down, I think the nearby support beside the 12,860 levels, they may actually go down to 12,520. So in the meantime, we have to watch for reaction here. The market can hold out here at 12,860. Maybe it will continue to test the upper end of the range. Okay, but again, I am not going to buy this index for now. Over in Asia, we can see that the Nikkei actually traded to a high on Friday at 28,778.37, marginally higher than the March high of 28,734.8. Then more curiously, once the market take out this high here at 28,734.8, the market actually reversed to the downside. Now, this is of course the 4 hours time frame. You can see this reversal pattern. This is a classical reversal candle in candlestick analysis. So I'm of the opinion this is a fake move to lure people to buy, and I basically gone short because this is on hindsight, based on risk reward. I think this is a fantastic short selling opportunity because I have already short, and I'm going to place my stop at 29,100, not to place it too nearby to avoid the same fate that we saw here. And basically, if this reading is correct, then market may have a potential to slide all the way to 26,850 levels. So it's a big move here. Risk reward is superior. If I'm wrong, maybe I will just take a small hit here, but if I'm right, this is a major payout in the tune of perhaps 2,000 points. So this is, on hindsight, a very superior risk reward setup to sell. Okay, over in the Hang Seng, we can see that the Hang Seng this morning is testing the lower end of the range. Nearby support as I have mentioned for quite some time, it's around 19,950 level. This morning low is 19,905. Okay, so we can see the prices did test this level. It seems to be holding up for now, but if this market by the end of today cannot hold at this level, it may continue to slide lower to the next target here at 19,509. Okay, and of course, if the market cannot hold and breaks 18,829, the market is going to slide all the way to 17,000 level, which is also in line with the idea that this market is doing a three-wave pullback, okay, on a higher time frame. So just watch it. Now, over in mainland China, the market actually took out the near-term support at 4,059.5. So this sell-off may actually spill over to the Hong Kong Hang Seng Index, because this higher that we saw at 4,169.45 was actually registered on the back of a better than expected Q1 GDP number for China, and also on the back of a larger than expected rise in the retail sales. So this is a market that actually registered a high here at 4,169.45 on the back of very, very good economic news. But the fact that the market has been sliding down now and not continue to trade higher is a bad sign. So the fact that now he has taken up 4,069 points, the market is going to go test the next level at 3,984.5. If this level cannot hold, the market will go all the way in a very similar move in a three-wave pullback like what you saw in the Hang Seng to possibly 3,836. So there is a bit of a drop here. So we will have to see and monitor the development going forward. In the energy market, we can see that crude oil prices from a high of $83.49 has slid down to last Friday low of $76.39. And we see a bit of a rebound here, but the rebound has been very, very shallow. And if the market want to continue to go higher, it will have to turn around about now. Okay, if it cannot and take out the $76.69, this market may go down all the way to $75.68, which incidentally is where the big gap here originated. Now remember, 3 weeks ago, OPEC Plus announced a production cut, and this was announced on a Sunday. The market had no time, no chance to actually react. When the Asian market opens on the following Monday, the market actually gave up all the way to $81 and how much? $81.51. So this is the origin of the gap. So technically speaking, the market's continuing to slide. It may be attempting to close up this gap here. Okay. So this is in technical analysis, a thing called closing the gap. So if this gap is closed, then maybe the market can actually stabilize and continue to trade higher from where it started at $64.33. Okay, so basically, in my opinion, this is lower to buy. Of course, we will have to take it with a pinch of salt, because generally speaking, everybody is talking about global recession coming, and if that's the case, there will be less demand for energy products, and that is of course long-term bearish for energy products such as crude oil. But based on chart, okay, based on technical, it does look like $75.68 seems to be a fantastic level to actually target, and we will actually have to monitor whether it can hold. Okay, over in precious metal, we can see the price of gold went up to a high of $2,048.80 and has been sliding since. Now the lowest traded 1,969.3. okay, and we have a bit of a rebound back to $2,012.40, and the market again now is backpedaling again. So if this is the case, if we get another rebound somewhere within the $2,009 or $2,015, I think that's about all you can do for now. I think market need to do this corrective pullback to digest the rally that we saw in gold prices since the beginning of the year. Okay, so if this is the case, I think downside is a possibility. The market may actually first attempt to see if you can find the support at the point of origin. Now, before the market went up to $2,048.80, it started from $1,950. So this is the point of origin of this rally here, and there is every possibility it may come back and test this level. Now, if this level fails to hold, then we are looking at a potential of an equality move to the downside in the ABC move targeting $1,933. Okay, so that is a possibility we have to open ourselves to. Now, in the silver market, we also saw silver actually peaked last Friday at $26.09 and has been pulling back. And if this is pullback, does look and suggests that it may continue to slide lower below $24.64, perhaps targeting $24.05. So this is where I think it will be a much better levels to look for buying signal here. So once the price if it ever get to this price range, do look out for buying signal on the lower time frame. Now in the dollar index, we can see dollar actually have managed to rebound from the low of 100.42 to a high of 101.94 before it went into a consolidation flat lining. Okay, so this flat lining does suggest the market is now unsure which way to go, and it may continue to drift. Ideally it drift lower first to 101, even to 101.20 levels. Basically I still want to buy. I'm already long and I still want to buy, and I think at the bare minimum market may actually try 102.48 to 102.75 levels, because this two is where the two previous highs are. So there could be some kind of selling interest that are basically accumulating around here. So at the bare minimum, I think this market may actually target this range of 102.50 to 102.75. Okay, whether it can go beyond, we will have to see. Let the market tell us what it wants to do. Okay, so in the meantime, you can see the currencies are also pulling back. In the sterling, we have a high of 125.45 traded 2 Fridays ago, and the market has been pulling back in the potentially 3-wave decline, and if this is the case, it may be targeting 122.80. okay, but in the meantime, there is obvious support at 123.45 level, which is about this level. Twice the market seems to be holding out at this level. We will see whether in the meantime this market can hold at 123.45 levels. If it can hold, maybe it will just rebound from here and then take out a new high at 125.45. But if it cannot, then market may actually come down to test at 122.40 to 122.80 levels. Now in the euro dollar, the market has gone up to a high of 110.75. That was again 2 Fridays ago. The market gone down and now it's in a consolidation phase. And this morning we have a high of 109.96, which is within this bracket of prices, which I have mentioned many times over the last few days. Yeah, this is an area in which I think the selling interest may actually emerge. This level is 109.95 to 110.10. okay, so this morning high of 109.96 actually went into this bracket of prices. You can see prices are coming down, but this is a little bit too early. We will see what the European would do when the European market late opens in the afternoon, and of course what the Americans would do once New York opens. So in the meantime, this market continues its trajectory, which I think is beginning to take shape. The black line that we see here, this is the near-term support line, may not even hold. If it cannot hold, then the market will naturally gravitate towards this point of 108.30. So again, this is a one level in which you can target. Okay, and if this level cannot hold, I'm of the opinion medium to long-term market may actually decay all the way to 105.20, which is the low that we see over here. Okay. Over in the Aussie market, it's a little bit of a mixed feeling. We can see the Aussie has been very, very choppy. And this morning, we continue to see Aussies continue to slide. Now, last week on Thursday, we have a bit of a rebound to 0.6772, but the market could not take out the previous high here on the 2 Fridays ago at 0.6806. And this is creating a possibility the market may pull back in a 3-wave, okay, targeting 0.6620 to 0.6650, okay. At the current point itself, the market is 0.6672. So we are only about 20 pips away from this target, the upper end of this range. We'll see where the market will be doing here. Ideally, it stops falling from around these levels, okay, and then start to trade higher, okay. But in the meantime, it's very, very choppy. If you can afford not to trade the Aussie versus the dollar like me, then don't trade it, okay. Over the dollar versus the yen, we do see a larger degree 3-wave rally to 135.14, and this high was actually traded last Wednesday. Since then, the market has actually come down, but on Friday itself, we can see the market actually rebounded. So whether this rebound can sustain, which I cannot rule out, okay. I basically gone short at 135, okay. And if the market do rebound above 135.14 levels to 135.45 to 135.75, I think this will be another great area to consider adding to my short. But again, we have to see whether we get confirmation of this selling interest by means of a reversal pattern in the candlestick. So in the meantime, my target for now is actually 129.65, okay, which is the low traded on March 24th. Okay. Over in dollar Canadian, you can see that dollar wants to go up. Dollar versus Canadian is very, very strong. The market actually took out a marginal high here. This was last Friday at 135.64, which is marginally higher than the April 10th high of 135.54. So we can see there was only a minor breach here. You can see this morning market is beginning to want to challenge this high one more time. And if it succeeds, then it will continue to test the 138 levels. Okay, but if it fails and pulls back, it is still bullish. If we can see market pulls back ideally to 134 to 134.35 levels, this could be a buying range. Okay, if this is the case, then look for a buy position here for the market to go beyond 135.65 and perhaps challenging the 138 levels eventually. Okay, now over in Bitcoin, we see the Bitcoin has been deflated after rallying to 31,035 2 Fridays ago. The market basically is now retracing, and it's retracing in a big way. You can see that this leg of this fall here is a lot deeper than the initial leg of this decline. So basically what is happening, that market may continue to slide lower below the 27,137 that we saw on Saturday. So right now we see a bit of a rebound. Top side, in my opinion, is going to be very, very shallow, somewhere between $28,100 to $28,300, okay, at most. I think the market may actually come under selling pressure one more time. Unless the market zoom beyond this level, then of course I'm wrong and we will have to relook at the chart. But until then, there's a possibility market may come into a seller may re-emerge from 28,100 to 28,300 levels and take this Bitcoin below the Saturday low of 27,137. Okay, so this is the immediate risk over here. So that's all I have for you for today. In the meantime, you take care, and I'll come back to you with another update tomorrow. Bye-bye.